Are you a hardworking professional feeling dissatisfied with your 9 to 5? Do you want more ownership over your time? Are you looking for an opportunity to both make more money and have a positive impact? Do you want your piece to the American dream? Then buying a business could be for you. And it might be more accessible than you think it is. Business acquisition, also known as entrepreneurship through acquisition, is a growing trend in the United States. The Small Business Administration estimates that around 10 million baby boomer owned businesses will change hands between 2019 and 2029, creating a huge opportunity for people who are ready to roll up their sleeves and get to work. My name is Kira Hamilton. I'm a small business owner and SBA loan broker, and this is my series on how to buy a business. Buying a business isn't something they really cover in high school. Growing up, being a business owner was nowhere on my radar, and I didn't even really think of businesses as things to be bought and sold. Then in 2023, my husband and I bought a laundromat, and I quickly discovered how much I loved being an operator. I have found so much fulfillment in owning a small business. I am more in control of my life and more engaged than I've ever been. And I've come to understand that business doesn't just have to be about making money. When you're the one in charge, you have the opportunity to make thoughtful and ethical decisions that have a real impact on other people's lives. I want more people to have the opportunity to experience small business ownership and to understand how the process of buying a business works, which is the reason I decided to create this series. I'll be discussing how to decide if business acquisition is right for you, how to find and evaluate deals, and how to finance a transaction. Let's get right into part one.
So in part one, I want to talk about who can buy a business. And the truth is, really anyone can buy a business, but I think that ETA is a better fit for some people than for others. I think there are a lot of people out there who would be great in ETA. They just haven't thought of it, or maybe they feel intimidated by business. I used to feel intimidated by business and finances, and it took me time to get comfortable with it. And now it's something I actually really enjoy. So my goal is to demystify business a little bit and demystify the business buying process and talk about who it's a good fit for. So let's just start with why ETA to begin with. And I'll start by talking about in comparison to a startup. So as I mentioned in the intro, ETA is entrepreneurship through acquisition. It's just another way of saying business acquisition or buying a business. And compared to starting a business from scratch, it is a much less risky venture. The fact is, most startups fail. But when you look at data from the Equifax Small Business Delinquency Index, actually the failure rate on small business loans is fairly low. And when you buy a business, you're getting cash flow on day one. That is not the case with a startup. You have to work to get your customers, get your clients, get your product or service going. But when you buy a business, ideally you are buying a business that has already been successful. Some people buy businesses to turn them around if they already have experience in that area. But if you are buying business for the first time, most likely you're buying something with a track record of success, and you really just have to come in and not mess it up. Now, that is harder in some situations than in others, and we're going to talk about why it's important to find a business that's a good fit for you. But just generally speaking, compared to a startup, ETA is a much less risky venture. Now, compared to real estate, why might ETA be a good choice? Personally, my husband and I have both invested in real estate and in business acquisition. And I will say, for the time being, we're not going near real estate anytime soon. We had a really challenging experience recently. We own a 4-unit building in the Bay Area, and we had a tenant in December who stopped paying rent. And we started the eviction process, got an attorney, went through, all the court processes. But at certain points, there was just literally nothing more we could do. We just had to wait for the next step to happen. And that was really frustrating because we wanted to take action. We lost quite a bit of money on the situation and spent more money getting the unit ready to rent again. And there really was just this feeling that we didn't have control over the situation. Now, with real estate in general, it totally depends on what market you've purchased your real estate in. You might have bought a building in an area where the laws make it easier to evict tenants for just causes. But tenant issues are unfortunately very common in real estate, and it can be really frustrating as an investor. With real estate, you also often don't have control over the value of your property. An exception to this would be if you're doing fix and flips and you're actively going in with a plan to increase the value and resell or rent it at a higher rate than it was being rented for before, then you have some control over the value there. But a lot of it just has to do with market conditions. We've also seen our property value go down over the last couple of years because of market conditions in the Bay Area. And it doesn't matter, what we do to the building itself, those conditions are still going to be there. Now, with owning a business, of course, there could be legal issues that come up. There could be things that happen that are outside of your control. But I think just generally, you do have more of the ability to pivot and to try out different things and see how they work. So, for example, I own a laundromat. If I had a customer who didn't pay me for their wash and fold service, I just wouldn't do their laundry again. And that would be a pretty easy fix to that situation. If I have utility costs that go up, I could raise my prices the very next day to respond to that issue. And you don't really have that same level of control with raising the rent in real estate. And I don't think landlords should just be able to raise the rent every day. I think it's good that there are rental laws in place. But I'm just saying, if we're thinking about it, just the numbers and from an investment perspective, you do have more control over your prices in business. There's also a clearer opportunity to replace your salary with a business acquisition, if that's what you're looking to do with ETA. Because with a business, your salary is most likely going to be a line item, or at least there's going to be an SDE calculation, which we'll talk about a little bit later. With real estate, you don't typically see a salary actually built into the real estate investment unless you're talking about much larger commercial buildings. Not to say that people can't make a lot of money off of a real estate investment. Plenty of people have made lots of money in real estate. But if we're just comparing one business acquisition to one real estate acquisition and you were choosing between the two, I think it's more likely with a business acquisition that you would be able to replace or get close to replacing your salary, depending on what size of business that you're looking to buy. And you can also qualify for higher leverage financing with a business acquisition. I'm going to get more into financing options in part 3, but I'll just say briefly now, at least if you're going with SBA financing, you can get up to 90% leverage. What this means is that you can get up to 90% of the project amount in the form of a loan. So you may only need to come in with 10%. Now, there are definitely situations where people need to come in with more than that, but that's the standard structure of an SBA loan. With real estate loans, the leverage tends to be lower. So you may need to come in with 20 or 30% down, and that just means you need more cash up front. So if you're evaluating, if you have $50,000 to spend on your next investment, you may be able to get more money towards a business acquisition because you can get a higher leverage loan than you would be able to get for a real estate transaction. So your money could take you further in ETA than in real estate. And then a point I'll come back to before moving on is having more active participation. Now, this might be a pro or con for some people. I don't really think that either business acquisition or real estate are completely passive investments. I have definitely had to put work into my real estate investment, but it really depends. If you, say, have a property management company in place, real estate could be more passive. And I think generally speaking, it's more passive than business acquisition. I enjoy having a higher level of participation because I like driving value. And that's something that I have found frustrating, as I mentioned, about my particular real estate investment, is that there have been times when it doesn't really matter how hard I work on it. I'm not necessarily seeing different results. Whereas with owning a business, generally, when I work harder, I see results for that. Now, they're not maybe easy to come by, but I feel like my active participation has led to a greater return on investment. And I will say the value of my business has gone up since I bought it, the value of my real estate has gone down. And then just a few more points about why generally be interested in ETA. One reason I think is for more autonomy. Now, I will say I very specifically did not use the word freedom here because I don't really think of freedom when it comes to business acquisition, because there are times when your business is going to demand things of you. I have definitely canceled plans with friends. I have skipped out on trips. I have had to rearrange my schedule for the day because I needed to take care of something at my business. But I will say, I feel like I have a lot more autonomy being a business owner than when I had a 9 to 5 job, because I can control the hours that my business is open, when I have employees, when I want to go on myself, when I want to work remotely. I can organize this around the schedule I want with the rest of my life. There are also so many opportunities for growth. And because you're the one in the driver's seat, you can choose what you want to work on. Do you want to learn more about sales and marketing? Do you want to get better at operations? Do you want to become a better boss? You can touch all different parts of your business. And I'm not saying that you should. You definitely need to delegate. You can't do everything, but there's the opportunity there for you to work on so many different things, to be challenged in so many different ways, and to really choose what you want to focus on. I also really think there's truly an opportunity to have a positive impact. Now that I'm an employer, I get the chance to think of those bosses I had who I really loved, who encouraged me and made me want to work harder. And I can emulate the things that they did. And then I can think of the bosses I had who, were frustrating to work with and who I was scared to go to with problems and who made me feel nervous coming into work. And I can do things differently. I can give people a better work experience than some of the situations that I had. So when you're the business owner, you can choose how much people get paid. You can choose who gets opportunities. You can create the working conditions that you think people should have. And when you think about how many hours a week your typical person spends working, how many hours that adds up to in a life, having a healthy and positive work environment can really make a difference in someone's life. So, who is ETA ultimately for? I think it's for people who are interested in personal growth, people who are looking for a challenge, and people who want to work. I really want to emphasize this last part. Entrepreneurship through acquisition is work. It's work finding a business. It's work figuring out the financing. It's work transitioning. It's work running a business. But I think that there are a lot of people out there who are looking for something different than what they currently have. Maybe they have a W-2 job that they're not enjoying, but I don't think it's necessarily that people want to work less. I think they just want more control over their time, more opportunity to drive value. And that's what business acquisition is ultimately about. It's going to push you in so many ways, personally and professionally. I have had to become better at managing my emotions, managing my mind, because I want to be an example for other people. And I'm ultimately the one responsible for this business. I'm responsible for making sure our customers are treated well, that they're receiving the services that they should be receiving in a quality and timely manner, that my employees are being treated well, that they feel good about coming to work, and that they want to work hard for the team and the business. ETA is not for, in my opinion, what I call a HoldCo bro. What is a HoldCo bro, you ask? A HoldCo bro is a term I have come up with to refer to a certain type of searcher, which is just a word for someone looking to buy a business. These people tend to be younger. They don't really have experience. They've worked, but they've never managed a team or owned a business before. They don't tend to even have a lot of money, but they've got this plan that they want to quickly acquire multiple businesses. And when I say quick, I mean relative to business acquisition terms. So, they want to buy several companies in the next 3 years and put them in a holding company, which is just a company that owns other companies. And of course, there are people who have been very successful with a holding company strategy, and there are plenty of people who have made a lot of money doing this. They tend to be more experienced and have more capital than the type of person I'm talking about. Really, the spirit of a HoldCo bro is someone who doesn't really understand and respect that businesses take work. Yes, they are things that can make you money. Yes, they are assets. But I think if you just look at them as assets, as numbers on a piece of paper, you miss out on the completely human element that is inherent in business. Business is about the team that makes it up. A business is nothing without the people who are creating the product, providing the service. And it's nothing without the customers who make the business possible. Business is about people. And I think people who come in with this plan, sort of a passive income strategy, or they're just looking at the big picture of how many businesses can I buy and how quickly, I think they're missing a lot of the point of business acquisition, in where, especially with your first acquisition, you should plan on being the operator. You should plan on putting in work. You should plan on prioritizing your business for this period of time. And if you end up going with a HoldCo strategy later on, fine, but at least do one business acquisition first and learn how to become an operator. Okay, so what do you actually need to buy a business? Really, you need two things. You need experience and you need money. Now, the less money you have, the more experience you're probably going to need, and vice versa. I'm going to get into financing options in greater detail in part 3, but I'll just touch on some of them now. So, for example, you can obviously buy a business in cash, and there are people who do that. There are businesses that you can buy for under $100,000 or a few $100,000. And if you've got that cash laying around, then your experience probably doesn't matter so much, just as far as being able to do it. Does it matter for actually running the business? Yes. But if you are buying a business for $300,000 and you can just give the owner $300,000 cash, that's a very appealing offer, and the owner may not care that much about your experience. Now, I will say, people put a lot of time and energy into their businesses, and I think most sellers want to see their business go to someone who is going to work hard at it, treat it well, and have it continue to be successful. So just because someone is coming in with an all cash offer doesn't mean that the seller is going to automatically say yes. But of course, that is a very appealing offer. Now, a lot of people don't have the amount of cash in their bank account to just go and buy a business outright. So most likely you're going to need some level of financing. There's seller financing, where the seller is essentially your lender. You're making payments to them. There's a personal loan, which is a type of financing that's based just on your personal finances, your income, your debt to income ratio. There's a conventional loan, which can be used for business acquisition. It's a non-government backed loan. We'll get more into that in part 3. And then there's an SBA loan, which is my personal favorite, and that is a government guaranteed loan that comes through a lender to you in order to buy or grow a business. And if you do need to get some type of financing, experience is definitely going to come into play. Ultimately, what a lender is trying to decide when they review your loan application and review the business that you are seeking to acquire is, how likely is it that this loan is going to get paid back in a timely manner? And a lot of answering that question comes down to who you are as a borrower. And this is where your experience can really help you out. A lender is going to be more excited about providing you with a loan if your experience has some match with the business that you're looking to acquire. Now, it doesn't necessarily mean you have to have worked in that industry or that you have to have owned a business before. You just need some level of transferable skills. Some businesses are easier to apply transferable skills to. So laundromats, pretty much anyone can run a laundromat. You should have some basic business skills, but the business model is very simple to understand. A janitorial company would be another one. Not to say there's not things that are complicated about any business, but cleaning is a pretty simple service to understand. Now, if you get into, say, a niche software business or a contracting business, lenders are probably going to want to see that you have some level of experience in those industries, but not necessarily. If you do have really strong experience, you can qualify for more favorable financing terms. So, for example, if you have strong experience, a lender is probably more likely to allow you to use seller financing towards the equity injection of an SBA loan. I'm not going to go into detail about that now. All you need to know is it would be a situation where you would need to put less cash into the deal. We'll get more into it in part 3. Now, if you have a relatively high amount of cash, a lender may be less concerned about your experience because they know, well, if something doesn't go well for a couple months, maybe the business doesn't cash flow as strongly. This person's got $1 million sitting in the bank. They're going to be able to make this loan payment for however many months. So if you've got a lot of money, it fixes a lot of problems. Who would have thought? So it's kind of this balancing act between money and experience. Okay, so how much money do you actually need? I'm going to put it out there as a general guiding principle. You should have 10% of the purchase price of whatever business you're looking to acquire. Now, I do want to throw this caveat out there that there is technically a difference between the purchase price and the project amount. So with an SBA loan, for example, you're going to need to pay the guarantee fee, which is anywhere from 0 to a few percentage points of the total loan amount. You may have some working capital that can really range depending on the size of your business and its working capital needs. You might take out $10,000 of working capital, or you may take out $300,000 of working capital. It really just depends. And then you're going to have some other closing costs. Those costs, the guarantee fee and the other closing costs, are going to be rolled into the loan. So it is going to increase your total loan amount, but it's probably not going to change your actual monthly payment by that much. And it's not going to increase the amount you need to purchase the business by too dramatic of a number. But just to put it out there, you may need more than 10% to actually buy the business because of those closing costs, or because the lender may just require that you put more money down for one reason or another. The amount of money you need is also going to be based on your experience. Like I mentioned, if you are a great fit for this acquisition, you're more likely to qualify for favorable financing terms. A lender may not require you put as much money down. And it also depends on whether or not you can get seller financing. Because if you can't get seller financing, then you're definitely going to need to put at least 10% down. It also depends on the lender that you're working with. Some lenders are just more conservative and they need to see a certain debt service coverage ratio, which we'll get to more in part 3. And so they may just want to see borrowers come in with more money in order to achieve that number. But I think that having 10% of the purchase price is a good place to start. So if you have 10% liquid in all cash or relatively liquid, that's enough to be taken seriously by brokers and sellers and lenders. I definitely recommend checking out this book, Buy Then Build by Walker Deibel. It is one of the books that so many people who are getting into ETA read. It's got a ton of useful information in it, including a calculation to figure out how much money you need to buy a business and how to take the amount of money that you have and put it in an equation and figure out what size business you can afford. So I definitely recommend checking this out. Some other things to think about to decide if ETA is right for you. I would ask yourself, what kind of lifestyle do you want to create? Some people are looking for a life where every day is relatively the same, things are consistent. They can count on their monthly paycheck. They can count on getting home at a certain time. And that's not necessarily the case when you're a business owner. If you have a tough month with your business, some unexpected expenses come up, it's not really an option to not pay your employees. So there might be a month when you make less money than you're expecting, or there may be times when a lot of problems are coming up that require your attention and you're working late a lot. It's definitely possible to create a level of consistency in your income and in your schedule with being a business owner, but it also comes down to what level of responsibility you want. Because when things go wrong in your business, and I say when, not if, because there's always something that can go wrong in business. When you're the owner, it ultimately falls on you to fix those problems. Now, this really depends on what size of business you have. If you have a larger business, there are more layers of employees and management, then there may be more staff in place to help you solve those problems. but you are still the final stop. You're the person who needs to make the final decisions. You're the person who is ultimately the most responsible for the success of this business. So, do you want that level of responsibility? Maybe for some people, that wouldn't be appealing. There are definitely plenty of people who don't want to be the one in charge, don't want to be the person who has to scrap their weekend plans because something came up that requires their attention, or go fix a problem at 9 p.m. They'd rather someone else have that level of responsibility. So it's important to be really honest with yourself about this. And then ultimately, what is your risk tolerance? Now, I talked about in the beginning, ETA is a lot less risky than starting up a business, but it could be riskier than whatever your current situation is, especially if you're putting a lot of money into it. If you're putting all of your savings into this venture, then you're going to really hope that it works out. And there definitely is a risk involved. Now, I will say, I think there's risk with having a W 2. I mean, most jobs you can be let go of at any time. So I don't mean to say that having a job automatically provides 100% stability, because it doesn't. But I think it's just about you and your personal situation and your monthly expenses and whatever current work you have. Is ETA a risk that you want to take on? It may be a very worthwhile risk, or it may not be something that makes sense for you right now. All right, that was part one. In part two, we're going to get into how to find and evaluate a business. Be sure to check it out.
If you found this video helpful, please like it and subscribe to my channel. That will help the YouTube algorithm make my content more visible and get this information out to more people. And if you'd like to discuss financing options for your acquisition, you can find my contact information in the show notes. Thanks for watching.